We see Brent crude touching $100 a barrel. Of course, we know when it comes to fuel, it is the largest cost for airlines. How are you looking at $100 oil now?
Yeah, so we're pretty well hedged going forward until the end of June. And then it sort of tapers off past that. We've always been very active in the hedging market, and all our hedges are effective at the moment. So that gives us some time to cope with the higher fuel, gives us some time to manage capacity, make sure we have airfares to be able to cope with it. And a lot of our competition go into this very unhedged. I think all the American carriers don't have hedging, or domestic carriers are probably in the same boat. So Qantas does have an advantage in having the time to manage this, and hopefully the crisis can be resolved quickly and doesn't last for months or years.
Alan, at what level are you hedged, and at what oil level will you be concerned?
So as I said, we're very well hedged until the end of June. We're not giving the details about what the exact hedges are, but they are effective, and any oil prices that are there and have been increasing for a while, it has been effective for it, and that continues past June on a declining wedge.
Alan, just very quickly here, does the closure of Ukrainian airspace make a material difference to you?
No, it doesn't, because our really only flights that get impacted are the UK flights that we fly from Darwin. And we have plenty of flight paths that avoid Ukraine. There's a flight path over China and Russia. If China closes down because of sanctions, there's a flight path through Central Europe. And at the moment, we're well away from Ukraine. We don't fly through Ukraine, and we don't have an issue through that. So it's a very minor impact on us. I suppose one of the advantages that we have at the moment is with this is that Australia is often seen as a safe place for people to take holidays in times of crisis. So there is potentially a positive upside for this country, with Asian traffic not going to Europe and going to Australia, North American traffic coming here as well. So with all of these things, there are pros and are very big cons when it comes to the economics around them.
Alan, I mean, it's quite serendipitous that we're having you on. We were really going to be talking to you about earnings, and I do want to get to them, and looking for the outlook here as well. I mean, when do you see the aviation industry returning to some form of normalcy, pre-pandemic levels? And just to put on top of that, I mean, even as you've got China and Hong Kong, of course, not open right now, and I think Western Australia's border restrictions, you've likened them to those that North Korea employs. These are all, at the moment, headwinds. When do you expect them to disappear, in other words?
Well, they are disappearing, because with Western Australia, we've actually, which is the only part of the country that has been closed, we have a date now. It's opening in early March. We've added a huge amount of flying to Western Australia from the eastern states in March and beyond. And our forecast now is that in the second quarter of this calendar year, the final quarter of our financial year, the April to June quarter, will be back to 90 to 100% of pre-COVID levels. And when it goes from the July quarter, we'll be back way over 100% domestically. And the demand is coming back already. Leisure is over 100%. Our Jetstar subsidiary is planning to get to 120% over the Easter period. And then internationally, the Australian borders are opened up. As you know, the largest markets for us are open, the US and the UK. They account for nearly 50% of our ASK capacity. And we're forecasting that by the time we get into, again, the July quarter, we'll be at 70% plus of our international capacity that we had before COVID. So the build-up, the outlook is looking pretty good for us at the moment in terms of what we see as the demand and how we see the borders opening. There are a few countries that we're hoping will open up post-July, at the latest July, that are also significant. New Zealand, the Japanese market. And then I think for us, the Chinese market is relatively small. It represents, I think, less than 10% of our ASK pre-COVID, and there are plenty of other markets we can deploy that capacity to.
Alan, some suggesting that your earnings could rise as much as 40% this coming year. Is that a fair assessment, and what would be the risks to all the projections that you have?
So we're not giving an outlook, and it's too volatile out there to give outlooks. But what we have said is that our business is in a better position now than it has been, and a lot of our competitors. We're one of the few investment-grade airlines in the world. We've got our debt back into the range that we set for ourselves a few years ago. And we have a plan to get it down even further over the next while. We have taken $1 billion out of our cost base. Our domestic competitor went into administration, has changed their business model. We'll think we'll end up with 70% of the domestic market. Internationally, we're trusted by Australians. We're the experts in getting Australians around the globe and back into this country. We know what the restrictions are, and we're seeing strong demand compared to our competitors in and out of the country. So they're all positives towards earnings momentum. And we now see the borders opening. We believe now, with the highly vaccinated nature of the Australian population, the fact that Omicron has probably impacted a huge proportion of the population here, we think the borders will stay open, and that's really good for us going forward. The risks around fuel price and the risks around another variant of COVID coming out and the potential impacts that could cause, but they're probably low risks compared to the risk we faced over the last 2 years.